Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to go through a few charts of interest for the week ahead, or a couple of charts that you should really be focusing on for the week ahead, and why. So in our market outlook we were looking at the dollar index, and we were looking at the fact that the dollar index had rejected this 98.50 level once again on Friday with a real nice bearish engulfing close. This rejection again of this high suggests that actually the buyers are failing to break above previous resistance, which should suggest that we are going to push back lower. Seasonally, the dollar index actually drops through the winter months, and we can see that obviously price has been pulling back for a while, but now we're in December, we could see that follow through and see price push beyond those lows through there. So what we're really watching for is if the market can break below this trend line support, then we will look for further moves down towards this $97 area and these key lows here where the market found previous support in the past. Another chart of interest you should be really watching, if that's the case, is the euro US dollar. The market has been finding support recently back at this 1.1 level. Now, the Euro Central Bank, ECB, isn't very bullish at the moment, which could downplay some euro moves across other currencies. But if the dollar index is going to push lower, then we should expect euro dollar to push higher, potentially into this resistance back up at 1.1080 level down in here. Recently we spoke of a key strategy where you should look for the market to come into a key supporting level, wait for a decent buying opportunity, and the market's gone into an oversold region, so you could look for a buy above these highs here around about the 1.1028 with targets up at this key level through there. Alternatively, wait for a change in cycle. What we mean by that is for the market to start making higher highs on this time frame again. So if the market pulls back, pushes higher, pulls back in, look for long opportunities from these previous structure highs through there. So that's something to watch on Euro USD. Another chart that was our main focus in the market outlook was New Zealand US dollar. We pointed out the fact that the market had been ranging for a number of days now, and this triangle pattern was something that we noticed. The market was really struggling to form any kind of new higher highs. Obviously in the Asia session so far, the market has started to push higher and break through this recent high, so we could see the momentum follow through towards this 6,500 level. The dollar has been recently quite strong until it came into that resistance level, and Kiwi didn't really get affected all that much. Both strong currencies, and that's why we saw the market ranging through here. The market has now decided it wants to move higher overnight, so we'll have to watch this one. What we want to see is the momentum continue. We don't want to see a bearish close through back into this range. If we were to see that, that would be pretty negative for the New Zealand dollar, but expecting that dollar weakness to follow through, so we should see 6,500 by the end of the year. Moving on down to gold. Gold is a real good chart to watch at the moment. Really keep your wits out on gold. The market has broken through this recent trendline resistance, closing above at this key 1450 level. In the past 2 Decembers, the market has risen quite significantly. Seasonally, in pre-election years as well, the market tends to move higher in December. So we're looking for buying opportunities, and the market is down at this key supporting level. So I want to be a buyer of this market. If the market continues to pull back, I'm going to look for long opportunities on key areas. Now, if I just go to the hourly time frame, what we might see in the London open session in a few hours is the market pulling back into this previous breakout high on the hourly time frame. If the market does that, we could look for some long opportunities in here. But what you want to do is make sure your stops are below these swing lows down in here, just to protect and cover that area in case the market did want to come back down and test 1450 again. So how that would look essentially is, if you were going to go long from this sort of area, is make sure those stops are clearly below some key swing lows, because your targets are going to be looking for 1480 first, which is up in here, which is still a nice return of 1.6 to 1, and then we're looking for the recent swing highs all the way up into that 15 20 sort of area. Okay, so real nice healthy risk to reward profile there on this time frame, using the daily analysis just through there. So look for buying opportunities in gold. This market looks likely to rise through seasonality data. So thanks for watching this video update. These are some charts to watch for the week ahead. We'll keep you updated on any other movements. Thanks for watching, and I'll speak to you soon.